Imagine that money exists only digitally. No cash, no banknotes, no coins, just ones and zeros on the blockchain. Independent of banks, independent of governments, and yet usable by billions of people. Sounds like science fiction? Reality has long since caught up with us. Today, we talk about cryptocurrencies, blockchain, Bitcoin, digital gold, and how new technologies are changing our future. The idea of digital money. Humanity has been using money for thousands of years. Initially, it was shells, then gold, later paper, and finally digital transactions via banks. But there's a problem. Money is controlled by central banks. It can be printed indefinitely. This leads to inflation and mistrust. Many people ask themselves, is there a way to become financially independent? The answer, cryptocurrencies. Digital money that doesn't depend on a bank or government. Instead, it functions solely through mathematics, technology, and trust in a network. Bitcoin, the birth of a revolution. In 2008, a financial crisis shook the world. Banks went bankrupt. People lost their faith in the financial system. At that very moment, a mysterious name appeared: Satoshi Nakamoto. But who is Satoshi Nakamoto? To this day, no one knows for sure. Was it a single brilliant programmer, or perhaps an entire team of experts? Some suspect famous cryptographers were behind it. Others believe it could even have been a government organization. The only thing that is clear is that Satoshi published the Bitcoin white paper in 2008. And in 2009, he created the first block of the blockchain, the so-called Genesis block. After that, Satoshi suddenly disappeared from public view. To this day, he has never revealed his identity. His identity remains one of the internet's greatest mysteries. In 2009, the first cryptocurrency was created, Bitcoin. Only 21 million Bitcoins can ever exist. This makes them scarce and valuable, like gold. That's why many call Bitcoin digital gold, a store of value in an uncertain world. But how does it all actually work? The basis of Bitcoin and all cryptocurrencies is the blockchain. Imagine a digital ledger. Every transaction is recorded. And this ledger isn't secret. It's visible to everyone. Each block contains data. These blocks are linked together like a chain of digital bricks. Once entered, a block cannot be changed. This means no manipulation, no forgery, complete transparency. And the best part, blockchain isn't just for money. It can store contracts, secure supply chains, and even make elections digital and tamper-proof. Bitcoin stories from the early days. Bitcoin's early days were full of curious moments. One of the most famous is the so-called Bitcoin pizza story. In May 2010, a programmer bought 2 pizzas for 10,000 Bitcoin. At the time, that was equivalent to around $40. Today, those pizzas would be worth billions. Many early users also lost their wallets or passwords. Estimates suggest that millions of Bitcoins are lost forever. This makes the remaining coins even scarcer and even more valuable. But how do new Bitcoins actually come into being? This is done through so-called mining. Computers solve complex mathematical problems and receive new Bitcoin as a reward. Initially, you could mine with a regular laptop. Today, you need huge data centers that consume vast amounts of electricity. Bitcoin's energy consumption is a hotly debated topic. Critics compare it to the electricity consumption of entire countries. But here too, technology is evolving. More and more mining farms are using renewable energies such as hydropower or solar power. Bitcoin was just the beginning. Today, there are over 20,000 different cryptocurrencies. Ethereum, the platform for smart contracts, Cardano, Solana, and many more, each with its own strengths. Smart contracts are small programs that execute automatically. For example, a purchase contract that fulfills itself as soon as the conditions are met. This gave rise to entirely new financial systems: DeFi, decentralized finance, loans, insurance, trading, all without traditional banks. NFTs, or non-fungible tokens, have also made headlines. These include digital artworks, collectibles, and virtual real estate in the metaverse. Blockchain creates a completely new digital economy. Of course, this technology has two sides: opportunities and risks. The opportunities: fast and affordable payments worldwide, freedom from banks, protection against inflation, new business models that were previously impossible. But there are also risks: sharp price fluctuations, fraud and hacker attacks, and unclear laws and regulations. Another risk: quantum computers. In the future, they could be strong enough to crack today's encryptions. At the same time, researchers are already working on quantum-safe blockchains. Many compare the crypto industry to the internet in the 1990s. Back then, it was full of skepticism, but it was the beginning of a global revolution. What does the future of crypto hold? The world is changing. More and more countries are considering their own digital currencies, so-called CBDCs, central bank digital currencies. Companies are investing billions in blockchain projects, and more people are discovering cryptocurrencies as an alternative to the traditional monetary system. Whether it's Bitcoin, Ethereum, or technologies we don't even know about yet, the digital revolution has only just begun. Perhaps in a few years, we will see a world in which cash disappears, in which digital currencies and blockchain applications shape our everyday lives. The question is no longer if, but only when. If you want to learn more about the future of money and technology, subscribe to the channel and stay tuned.